You're live, you're live. Good morning. You're live, you're live, you're live, you're live, you're live. Good morning. It's another day. It's another trading day, the 2nd of October, Tuesday, Wednesday, yeah. We inform those on the group chat that we are live. You inform we're live, we're live, we're live. It's another trading day. I have something very important to share with us this morning. I'm going to take us through direction, location, and confirmation. Right? I'm going to take us through direction, location, and confirmation. All right. So we inform others that we are live. 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 Good morning, billionaire. Good morning. Good morning. Good morning, billionaire Jonathan. Okay, tell the men and brethren that we are live. Okay, yeah. Morning, morning. Welcome to pre-London live market analysis with ProFx. What we simply do every morning is we provide valuable insights into market dynamics, key levels, and opportunities to watch out for. Right, and this session is designed to equip you with the knowledge, the right mindsets, habits, and skills to navigate the forex market, especially the London session as it approaches. All right, so I'm going to share with us something very important this morning. Like I said, I'll take us through the model of the rule of engagement, direction, location, and confirmation. So I want to encourage everyone to please take these sessions very seriously because quality education is rare out there. I can tell you for a free. Quality education is rare out there. Before you can get this kind of value, you have to pay for it. Okay. Because of my passion, I know how it felt like for me to for 4 years I was just up and down looking out for information until I met my mentor in my 5th year. Do you understand? So I know what it takes to have quality education for mentorship and getting this for free. You should actually value it. Okay. If you know anyone that wants to also learn how to trade, bring them to the live call, direct them to our community, let them learn from us. Okay. We offer quality, world class trading education, right? So I'm going to take us through the model. Confirm if you can see my screen, if you can hear me and can see my screen. Confirm on the chat box. I can hear you, I can see my screen. Let me see. If you can hear me, if you can see my screen, confirm on the chat box. If you can hear me, if you can see my screen, confirm on the chat box. Yeah. If you can hear me, if you can see my screen, confirm on the chat box. So say, oh great, great, great. Yeah, yeah. All right, let's move. Let's move. Now you're going to write out this process. Okay. I hope you are with your writing materials, you note all that. Okay. What we are doing every single time on the chart is DLC. I've said this over time, over time, over time, over time. The rule of engagement, direction, okay, location, confirmation. All right. So as I'm writing out, you're also writing out in your notes or you're taking a screenshots, whichever you prefer. So, and I said this DLC is the rule of engagement, regardless of your strategy. Regardless of your strategy, this is the rule of engagement in trading: direction, location, confirmation. And I said in every of these engagements, we now have different concepts. That this one will say I do SMC, this one will say I do price action, I do indicator. So inside all these three engagement rule, we now have different concepts. So the concept for direction that we treat is called market structure. The concept under direction is what? Market structure. The concept under direction is what? Market structure. So you want to learn how to read market structure because it gives you the what? Direction. Now under location, we now have the different types of traders that come out with their bragados. Some will say I do support, some will say I do demand, supply, order block. All of them, they are all answering the question where. Okay, all of them, they are all key levels. All of them, they are all locations. They are all the intentions of buyers or sellers. If price comes to a support or a demand or order block, we expect to buy. If price comes to a resistance or supply, we expect to sell. So for location, the different concept I will list them out. We have support and resistance. Support and resistance. Okay, we have demand and supply. Demand and supply. We have order block. All right, order block. We have fair value gap. FVG is fair value gap. FVG is what? Fair value gap. Okay. We have Fibonacci retracement levels. Fibonacci retracement levels. We have trend line. They plenty. So you can see that different strategies, instant, all of them, they are all under location. Okay. Which again do we have? So if it comes more, I'll bring it up. So all these things, whether it's support you are using or demand, or other block or fair value gap or Fibonacci trend line, they are all locations to buy from or sell from. Then lastly, for confirmation, okay, that means so when do I want to enter? After knowing my direction, after knowing my location, and now to know when to enter. So the two basic confirmation is your change of trend or your candlestick patterns. Candlesticks, right? Your candlesticks. Okay, let me add them. There's one more here. Liquidity is here. Liquidity is here. Liquidity is also a location. That's where we now talk about Asian high, Asian low. Yes. So my previous daily candle that we use is here too. Previous daily candle is a location too that we do every day. Okay. Bank level too is a location. Bank level, or we call it psychological levels. Okay, please write out this thing or screenshot it. Important. Psychological levels. Yeah. Consider there are very plenty. So which one should I choose? Any one that you can master. You just need one or two and stick with. Okay. As time goes on, you can know me. I know everything because of my nature of I teach, right? So I understand every of the concepts, how they work. But I don't use everything. I just use one or two. And the more you see them all play out, the more confidence for you. But you don't need to know everything. You just need to know one or two or three to add to your confidence. So this is what we do: direction, location, confirmation. I have a love language which is fire emoji. If what I'm saying is making sense, I want to know if I'm making sense. right? I want to know if I'm making sense. I just have 5 more minutes to just explain this brief before we go into the market analysis, right? If what I'm saying is making sense, give me some give me my love language, right? My love language is fire, 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 fire. So DLC. Don't complicate matter, right? We are here to simplify the complex jargons. Okay, good. We are here to simplify the complex jargons. Everything you hear in the forex market, they are under DLC. Everything you are hearing, whenever you hear a concept now, just ask the person, is it direction or location or confirmation? Now, what will help you more is direction answers the question what. So direction is saying what is the market doing. That's direction. It's answering the question what. That's the bias. We call it now. If I want to use English for you now, I will not call it. Look at the English they use. Oh. Institutional bias. Institutional. Wait, here happen. English too much. If you want English, I'll give you English. Oh. So the professional way to call direction, they call it institutional bias. Okay, that means the direction of the institutions, the big boys, are they going up or they are coming down? Right? Location answers the question. So, but in my own simple question, my own simple, I don't say what direction. I don't like wala. For location, the simplified English to use is where. Let's mean where. After knowing what, where. But you want to go professional, we call it institutional intention. Institutional intention. Wahala no come too much. Wahala no come too much like this. So to be truth, we call it what the intention of the institutions. That means after knowing that we are going to buy, we have known our direction to buy. So what's the intention? Where are we buying from? Where are we selling from? Okay, right? So I'll come to that later. Then for confirmation, of course, confirmation does not have any, but the simple English for confirmation is when, right? Confirmation is just saying, so when am I entering? When? Okay. So this is institutional. I've forgotten this. Let me check my note again. There's one name that's let me see if I still have it here. La 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 la. Okay, I will check it later. I'll check it later if I get it. So we have, I think it's still confirmation they call it. Yeah, confirmation. So that one still works. Yeah. So that's where we now want to enter the buy or the sell. Now, in between this intention and confirmation, there is what is called inducement and manipulation. Okay, that's where liquidity comes in place. So take notes. In between the intention, no, I'm teaching good. I'm teaching good. This is a very noteworthy, is a noteworthy, is a note taking in between intention. Oh, this mouse behave. In between intention and confirmation is what? In between intention and confirmation is inducement. We call it inducement, we call it manipulation, we call it stop loss on, we call it liquidity. They have different names. Okay. So in between intention and confirmation is inducement, manipulation, okay, yeah, range, consolidation, so many names. So there will be lots of manipulation, ranging, inducements, blah blah blah. Then we now have the confirmation, consolidation. Yeah, and so on like that. So in between intention and confirmation is what inducement. All right. So let me now explain it on the chart. So I come to the next slide. I haven't seen all this now. Direction, market structure is either uptrend or downtrend. It can't be any other. It can't be any. The trend. The trend is either up or down. I'm using this for my newbies in the house so we can carry everybody along. If you're also an experienced trader, it also reinforces what you know. All right. So it's not a waste of time. It's not a waste of time. You need to understand the process of what you are doing. Okay. The process of what you are doing. It reinforces what you know already. The mastery comes when you repeat your knowledge. Okay. Mastery comes from repetition. So market structure, what are we dealing with? Uptrend, downtrend. Uptrend, downtrend. Now, for market structure sake, now let me give you the process now. Let me give us the process. So number one, I hope you're writing. Number one is what? Read market structure. Read market structure. And the time frame to do this is your daily time frame stroke 4 hours. Okay. The time frame to do this so you can have a major structure as a day trader. All right, as a day trader, the time frame to do this is your daily or your what? 4 hours. That's for your major what? Structure. Major, yeah, major structure. That's the first thing. Okay, I have my notes here. I wrote it out for you guys so that I will not miss anyone out. So after reading structure, the next thing is you want to know what is called break of structure. I'll explain what break of structure means. After reading structure, the next thing is break of structure, and it is the most recent break of structure you are interested in. Okay, the most recent break of structure you are interested in. The most recent break of structure you are interested in. Then the next is you now want to know the origin of the break of structure. Origin of origin that caused origin that caused the break of structure. Okay. Then the next I have here, you will wait for wait for price to get there. That's number four. All right. Then five, I mentioned between intention and confirmation is manipulation, inducement, and stuff. Now that's where we're getting to now. Now we now look out for other confirmation. Okay, let me just say look out for manipulation, manipulation, comma, inducements, and so on. Liquidity. Look out for liquidity. So we call all these liquidity. That's the simple thing we use. We just call it liquidity. Okay. Okay. Right. To confirm. Okay. For confirmation. Yeah. For confirmation. Okay. Then lastly, you now enter. So when I've seen the manipulation, liquidity, blah blah blah. Once you get that, buy or sell. Once you get that, comma, buy or sell. So I'm just giving you this is what I do in the mentorship class to bring the vibe into this place so that those that can't afford the mentorship at least get a tip of what we do. Right. So this is the process. And I'll show you now at the left or under. Okay, so This is what is called break of structure for an uptrend. Okay, that means the previous high is broken. That's what it's called break of structure. Break of structure means that the previous high are broken to the upside. That's break of structure, as simple as that, right? For a sell also, for a sell, it means that we are breaking to the downside to create a lower low. That's what it means. It means that what we are breaking to create a what lower low. For the up, we are creating what higher high. That is market structure 101. You know, pass like this. So break of structure higher high for uptrend, break of structure lower low for downtrend. And so note that break of structure is used for continuation. That means break of structure is used when the trend is continuing, because we have two types of model. We have continuation and reversal model. Okay, we have continuation and reversal. So for continuation, break of structure is the concept we use. So let me write that out too. So break of structure is used for what? Continuation model or continuation phase of the market, anything you want to call it. I don't like using English. I want to make sure I break out all the English into like simple terms. So I'm looking for a simpler. So break of structure is used when the market or the trend is continuing, right? Why for reversal model, what we use is change of trend. So CHOT is used for what? Reversal. Okay, let me see if I'm following up to this point. Are we following? Am I making sense? Are we following? Am I making sense? Once it's, yeah, I want to ensure that everybody here is understanding, even to the newest person, right? Even to the newest person, everyone is understanding. Is it clear? Is it clear now? I want to make sure that everybody's understanding. Then so I'll continue. Let me get the feedback. Are we understanding? Clear, 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 clear. Give me a clear, give me a fire emoji. Making sense. Okay, great. I love that. You're not a newbie now. You be old student. I want newbies to Mr. Albert is saying yes. Okay, yes, You have said okay, yeah, I'm seeing my new student now. All right, so yeah, so break of structure is used to continue the trend, while change of trend is used to reverse. Okay, so that means that if I want to buy, I'm not back to my DLC now. If I want to buy uptrend, this is my uptrend direction. This is my D, Abi. I said in the boot camp that my direction is what? 0, 1, 2, 3. I said in the boot camp that my direction equals to 0, 1, 2, 3. Direction, direction equals to what? Is 0, 0, 1, 2, 3. And what that means is my zero is what? My zero is low. This for uptrend now. For uptrend, my zero is low. My one is high. My two is higher low. and my three and my three is what? Higher high. Higher what? High. That's for uptrend. Why for downtrend? For downtrend, my zero is high. Okay, my one is low. My two is lower high, and my three is lower low. You should be reciting this thing every single day as a newbie or as a trader. Direction 0, 1, 2, 3. Direction 0, 1, 2, 3. For a uptrend, my zero is low. You should be reciting this every single time until it sticks to your subconscious. For uptrend, my zero is low, my one is high, my two is higher low, and my three is higher high. My zero is low, my one is high, my two is higher low, my three is higher high. This is sorry, this is kindergarten, oh, and that's the way it should be, right? HH. There's no way you will not understand forex in this way. There is no way. There is no way. This is what is market structure. And market structure is the backbone of technical analysis. If you get it wrong in market structure, you will get it wrong in your confirmation. So so that we don't trade candlestick. Candlestick is not our strategy. Demand is not our strategy, right? There is a process. We call this the context. Those that use the English to confuse us, they call it context. I don't see things so. You see different jargons just to confuse you. But it's good, Sha, it's good. It's good. I love the technicality of the concept. It makes sense when you understand the simplicity to now use the concepts. So this is lower high, then lower low. This is your first job to read what market structure. So reading market structure, right? Like I said here, let's come back to number one. Is what reading what market structure. Read market structure. And I said we are going to use what daily and 4 hours because of what major structure. Now, so there's what is called time frame analysis. Okay, that's what it's called time frame analysis. That means every time frame you should be able to read market structure on every time frame from monthly to weekly to daily to 1 hour. Every time frame, the price is fractal. Okay, price is fractal. What that means is that the structure on 1 month is the same structure on 1 minute, just that it's going to be external and internal. Hope you get what I said now. Okay, under time frame analysis, the rule is that price is fractal. Price is fractal. That means the same structure of uptrend in 1 month is the same structure of uptrend in 1 minute. Difference is that 1 month might be external, 1 minute might be internal. Do you understand? But price is what fractal. So once you know how to read market structure, you can identify it in any time frame. Am I helping? Am I helping? Am I helping? Am I helping this morning? Am I helping this morning? Am I helping us? Am I helping us? Am I helping us? We are getting into the deal of the day. Am I helping us? So when I come to the chat, I want us to be on the same page when I'm analyzing the charts. Okay, this will help us to. Am I helping? Okay. Yeah. So so this is us. Let's stop here. Let's stop here for today. Let's come to the chat. It's already 7:30. Let's stop here for today. So I've given us a background of the process. So like I said, for us to trade continuation, we are going to use break of structure. Okay, this is for continuation. So let's come to the chart now, and let's apply what we just broke down here. Continuation, continuation. Okay, Yeah, so let's come to the chart now. Let's come to the chart now. So Euro USD, of course, my favorite for London section is Euro USD. That's my favorite, Euro USD. Okay. And it applies to all pairs. It applies to every instrument. There's no it applies to what? Every instrument. Every instrument. Now look very carefully. This daily time frame. At a glance, at a glance, what I've said, what I've mentioned to you, at a glance, this is a structure already. At a glance, what do you see here? Uptrend, Abi. At a glance, you can see that this is an uptrend on daily. Even a 5 year old that I thought forex would say that, ah, daddy, uncle, this is going up. This is going up. This is 4 hours. This is daily, sorry. So the first thing is you want to know what the bias, the direction of the market. So number one is what? Read market structure. And what do we see? Low. So let's label together. Let's label together, guys. Let's label together. This is low, daily time frame. All right, low. What did low produce? Low produced a high. Okay. What did I produce? I produced a what? Higher low. I produced a higher low. What did higher low produce? It produced a higher high. Okay. Well, I would say let me take this up. I would say this is the higher high because this broke structure. Okay, this one here, this particular one here is the break of structure. So let me use that as the higher high first. So that's higher high. Okay, that's the higher high. Okay, just trace it. Okay, higher high. Then we see a higher low again. All right. Then next, what do we see? A break of structure. This broke out. This broke out, came back, broke out. So this is the higher high, this small one here. Okay. Then this is higher low and what? Higher high. Again, higher low. So we are here now. We are currently at the what? Higher low. That's where we are currently at. So let me now delete everything from the past. So you don't need. So number two is what? Number two is what? What is number two, guys? From the six rules I gave you guys. What is number two? After number one, which is reading market structure. What is number two? Let me see if you're following. What is number two? Number one is reading market structure. What is number two? Let me see if you're following. Yeah, break up. But I said something in bracket of break of structure. I didn't just say break of. I said I was specific about the break of structure. Recent break of structure. Yeah, exactly. The most recent break of structure. So look at my chart now. Let me delete all this again. So my question is, where is my recent break of structure? So we could see very clearly that this was a break of structure. This one here, that was the break of structure. If daily is not clear, you come to 4 hours. If daily is not really giving you clarity, okay, you can come to what? 4 hours. So let's go to 4 hours because sometimes daily candle is not always giving us that clarity. It is too big. Now look at 4 hours now. It's very clear here. All right. So this is the break of structure. And ever since this time, we have been trying to what? Come back into the recent origin. But let me not gather myself. So break of structure, right? Good. Next question is the origin that caused the break of structure. So the origin that caused the break of structure. Let me zoom out very well. Let me zoom out very well. Okay. Zoom out very well. This is break of structure. Now, where is the origin? This is the origin. This guy here. That's the origin means extreme. Origin is what? The extreme. Before this price broke out, where is the extreme? Where is the extreme? This is the extreme. That is the higher low. Higher low. That is the extreme. So what do? I will extend it. I will extend it. I will extend it. I will extend it. I will extend. I will extend. Okay. Great. So this is how to do top-down analysis. So I can call this place now my demand. All right. This is a demand zone. This is a demand zone. So I have a break of structure. I have a break of structure. So what do we expect? We wait for price to get back into the origin. But look at what happened. When price got here, it broke out again, right? And it's trying to come down. So price didn't get to the origin, but price got to the Fibonacci retracements. So now that's why I said, okay, now this answers the question on location. So price pulling back to the origin is location. Let me write it out here. Price pulling back to origin is what? Location. Now for location, there are different types. Like I said, some say they use demand, some say they use Fibonacci retracement, some say they use order block, some they use support. Now those that use demand and origin, they won't have been on this trade. They are still waiting. The swing traders that use demand are still waiting. But if I use Fibonacci retracements, look at look at the magic. If I use Fib, if I don't make money because my Fib level is what? 71%. Where I enter my Fib level from. Look at, I saw a break of structure, right? 0, 1, 2, 3. Yes or yes? 0, 1, 2, 3. Direction. What do? I will wait for a pullback into a what? Location. In this case now, my location is what? Fib 71%. When it got there, did he buy? Yes, it bought. So me now that use Fibonacci retracement, we are involved in this trade. But those that use order block at extreme discounts, they are not involved. Okay, because when I was my mentor, we were missing so many opportunities. We were waiting for price to come down to the extreme. But we saw that every time we miss trade, the price will go up, will go up. So when I said, okay, what are the other locations? We call it point of interest, we call it key levels. There are different names we call it. So what are the other locations that we have seen in the past? In the past, that price do take from. Okay, because you have to back test. That's one important thing. You have to back test that location happens. I've seen over time that when price gets to 71%, it will buy. It doesn't happen all the time, but most likely when it gets to 71%. Now write this out. Write this out. If you are buying from your fib level is 50%. Let me draw it again. Hope you are following. If you are buying if you are using Fibonacci levels now, okay, the only two places you are expected to buy from, aside from Fibonacci self, this is the standard of the market. The only two places you are expected to buy from after a break of structure. Okay, let me put it this way. After a break of structure, all right, the only two places you are expected to buy from if you are uptrend, okay, is equilibrium and discounts. For an uptrend, after a break of structure, discounts. Okay, let me write it here now. I said for an uptrend, comma, after a break of structure, the only to location, you are expected to buy from is one, 50% equilibrium. So we call this flip zone. Okay, we call it what? Flip zone in some jargons. We call it flip zone. Then two, discounts levels. So this can vary. Some people use 61.8 Fibonacci. This depends on you now. Some people use 71% Fibonacci. Some people use 79%. It depends on you. I won't tell you what to use, right? Just go and back test and see the one that works most of the time. Okay? This is very, very important. Once you have seen a break of structure, this uptrend now, once you have seen a break of structure, the only two places you are expected to buy from, right? Before you now talk about amazing support to resistance, demand, supply, blah, blah, blah. The only two places you are expected to buy from is when price pullbacks to either 50% equilibrium or it comes down into discounts. When price gets to equilibrium, you now wait for confirmation if it's going to buy. If you didn't give confirmation sign, it's going to pull back more to discount. When price gets here again, confirmation, you wait for confirmation. Is that clear? This is discounts. Yes, discounts. So let's come back to the charts. Let me I'll screenshot this and send to us. Let's come back to the chart. So look at this place now. Look at this very carefully. Very carefully. We had a break of structure, right? Let me edit this to my equilibrium. See what happened. At equilibrium, it destroyed the equilibrium. It came further into the discount. Can you see? Price did not respect the equilibrium. Look at the trend. When it was dropping, okay, what did it do? It came here, it went up as if you want to start buying, it now came down into the discounts. That means this was a what? Manipulation. What I said. That means this buy here, pay attention, guys. This buy here was what? A manipulation because it came down again to take out this higher low and what? It now bought eventually. So if you are buying from here and you are stopped out, no problem. Enter again from here because you are now in the discount. This is now a very, very safe place to buy from because this place now is now what? The 71. So what I do is that I mark out from 71 to 100. I mark out everything as my demand. Everything. Okay? You can see I mark out everything as my demand from 71% to what? To 100%. And you can see how price respected it back to equal highs. Okay, and now we are coming back again into that same location. Do you understand now? Now let's now do the more recent price action. So we are still here. So it means that we've not broken out of this. If you notice, we've not broken out of this high. Not really. So we are still within this range. Okay, this demand zone is still has not been mitigated. So we expect price to come further into this demand zone, then maybe buy. Do you understand? So what we can see now currently is we can see this internal structure here. Then we had a change of trend to start selling here. So what we have here now is what? A change of trend. If you look carefully. So now let's now talk about change of trend now. After break of structure, talk about what? Change of trend. So how does change of trend work? Let me wrap up with it. How does change of trend work? Let me see. We are following. Okay. How does change of trend work? Now look at it. Very simple. Very simple. After my break of structure, right? That is clear, right? We expect price to pull back. Are we together? After break of structure, what do we expect? We expect price to what? Pull back into what? Equilibrium or discount. Shey? Now, in the process of this pullback, for now in lower time frame, this will be a downtrend. What do I mean? If I'm pulling up here, it's going to be like this. It's not just a straight line. Okay? If I'm retracing down, it's going to be a change of trend to come down. If I'm going up, change of trend to go up. If I'm pulling back, change of trend to pull back. This is the way market move. So for every new phase, for every retracement, for every pullback and continuation, there's always a change of trend because price is now moving from up to down. So for price to successfully move from up to down, there must be a change of trend. I come again. For price to successfully pull back from up to down, there must be a change of trend. That means if we are once buying on the lower time frame and it wants to reverse, I must see what a lower low first. That's one. Then retrace back to the premium and it drops. That's a change of trend. So let me write that. Let me mark that out very carefully again. So this is a change of trend from uptrend to downtrend. Lower low, lower high, then drops. So the first thing we see is that my higher low is going to be what? Is going to be destroyed. That's the first thing. Then next, I must not take out this high. That means I must not see high again. No. It must maintain what? The previous what high. That will be our supply zone. Once price gets there, I'm ready to what? To sell. Do you understand now? Same thing for a buy. Let me do a buy scenario. For a buy scenario, I must have first start selling, selling. Then for the buy to continue, I must see a change of trend. That means high, then we trace back to demand and what buy. It means I must see that this demand zone is what respected. So this is my change of trend. This is what happens every time in the markets. So let me come to the chart now. Let me show you practical. It's no be church or church. Now practical. Look at it. This is 4 hours, oh guys. This is 4 hours. What do we see here? Uptrend, Abby. So look at this place here. This is the recent low that was taken out. So look at this is the recent. This is the recent. All right. It was not maintained. So what happened? It sell back into what the demand. So on a lower time frame, it will be more clearer. So let's come to 15 minutes. On 15 minutes, it will be more clearer. If 4 hours is not clear, it will be clear on 15 minutes. Okay, good. So it all started here. This was where it started, the change of trend. Okay, that's where it started. Change of trend. So once we saw this happen, we now saw a what? Continuation down. Boom. Because this is the break of structure now. You can see break of structure for downside, right? Break of structure for what? Downside. I shared this with us yesterday. How I caught this sell yesterday. This is yesterday, right? What did I say I did? I map out the what? The high, and the what? And the low. and it gave 50%. I said there are two ways to buy from. Also, there are two ways to sell from, either equilibrium or premium. Start carefully now. Did it get to the equilibrium? Yes. Exactly at the what equilibrium was when this drop happened. Look at this drop. So this was the location. Location. So first we had what? Direction. We had the what? Direction. This is direction. 0, 1, 2, 3. Then we have what? Location. Then we had a confirmation that we sold. So that's the process. Okay. Remember, this is not a class, so you might not really get everything we are doing. I'm just trying to show you, expose you on how we approach the market every single day. So in the mentorship class, we have a breakdown much more. So before I continue, let me see if you are following up to this point. Let me see feedback. Fire, 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 fire. Following, 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 following. Following, 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 following. Fire, 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 fire. Give me the vibe. Give me the vibe. Give me the vibe. Imagine if you are getting this in the free class, imagine what you get in the mentorship. So if you are not this October batch mentorship, if you are not in the mentorship, I don't know what to say to you. If you are not in the mentorship this October batch, I don't know what to say to you. It is $200, but I've given an extra discount of $100, and you can also pay instrumentally. Okay, I will pour everything I know. This is my six years. 1, 2, 3, 4, 5, 6. So there's nothing that you want to experience that I've not experienced. Is anyone up to for those that are OGs in our midst? Has anyone traded up to 5 years? Is anyone who is the oldest trader? Uh, how many years have you? Let's even see. 3 years, 4 years, 2 years. How long have you been in the industry? I want to know my people. Just put your duration. 1 year, 2 months, 3 months, 1 week, 1 day. Fire, fire. Put your duration of how long you have been in the industry. Maybe like you have been hearing about it, but you don't know. I'm waiting. Okay, whilst we are doing that, let me come back to my chat. So put on the chat box how many years. So if I come back now to my notes where I mentioned, where's my note again? Okay, good. This is my notes. So in my notes, I said it's DLC, Abi. So what we now do every day, you will now understand why we do daily candle and Asian range every day. So what we do every day is, where is this guy now? Ah, is it on daily time frame? Okay, yeah. Well, the guy don't choke. So what we do on a daily basis, we already know our direction. We just come to know, okay, so what is the location? So where are we buying from? So in our everyday, we do what we do is what this. Okay, previous day candle, um, previous day candle, right? And what Asian range, that's liquidity. That serves as what our location, all right? Previous day candle and Asian range serve as our location. So there are other, you can use anything, like I said. Taught me the concepts and I went to improve on it. I went to do my studies and brought out what works for me because he doesn't day trade. He's a swing trader. And for swing traders, they don't they don't have business with internal structure and with sessions. They don't have business with sessions. They don't do London, New York, Asian. They just come to the chart, mark locations, and leave it. But as a day trader, you must take cognizance of the sessions you are trading. So I need to know how I need to now find a way to now how can I apply this supply and demand into trading sessions. That was how I brought about the Asian range and the previous daily candle. And I ask myself, so in my DLC, where is this concept under? Because you need to always bring everything you know under DLC. Bring everything you know under DLC. If not, you'll be confused because there are thousands of concepts. You go tire. Concepts plenty. So don't complicate. The market is already complicated. The market is already complicated. So don't complicate it again. All right. Don't complicate it again. We have been this sell. We saw this sell since Monday. Imagine if I'm a swing trader now. This is the advantage of swing trading. If I'm holding this sell, look at since Monday we have been dropping. Monday we caught the sell, Tuesday we caught the sell, and today too we are likely to have a sell again to the demand. So let's start from Monday and let's see what we did. It's already 8 o'clock. Let's do today. Let's not do Monday. Let's quickly do today. Then if there's still time, we now do from Monday. So what do? We map our candle low and close for previous day. All right. Then we go to 15 minutes. So I'll be very fast because I need to also plan for my trade. I need to also trade. I'm not just a teacher, I'm also a trader. All right. I also trade. Quickly mark my what previous day candle. Okay. Wednesday closes by 9 p.m. Right. Number two, what do I do? I map my okay. This is just what location, like I said, it's just what location. We still need to respect direction, right? We still need to respect direction. We still need to respect direction. Okay, so this is my location. So what's the direction? We have been bearish all along. Look at we have been bearish all along. So what is the recent break of structure? That's number two. Shape number two. This is recent break of structure here. Just look left. Recent break of structure, right? It means that this is my origin, lower high and lower low. So this is the range I'm expecting. Lower high, lower low. Now, why that is true, you on 1 hour, you notice that on a higher time frame, we are also having hey, this is the main break of structure. That's why it's good to always look at higher time frame. Don't be trapped on the lower time frame. Don't be trapped on lower time frame. Write that out on the chat box. Don't be trapped on the lower time frame. Don't be trapped. Don't be trapped on the what lower time frame. Frame. Yeah, I see. Don't be trapped on the lower time frame. So on 1 hour buyers, this is the structure from 1 hour. This is the break of structure we have on 1 hour. Very clear. Okay. So recently, it's as if we are in a discount trying to buy then sell, but we wait for confirmation. So we are currently in a low. We sell from what? From high. We buy low, we sell high. We buy low, we sell high. So when we see price as broken structure, we expect a what? A retracement to at least 50% or premium, then we sell. So because this is 1 hour time frame, I will mark out my what? My range. This is my range. And as you can see, equilibrium. So I'm expecting to see sell anywhere from here. It therefore means that Anything I'm doing inside this place is buy. Anything I'm doing inside here, I'm looking for what buying opportunities. Except the market wants to do otherwise. Okay, premium, then drop further into the what the demand zone. Yeah. Today, looking at this direction now, today, what do I expect? I expect to see buy. Okay, because now I'm in a very low point, right? This is a low point. So I expect to see a buy. So this is what I expect to see, right? Into 50%. First, then maybe to sell. So I'm going to wait for confirmation. That's the next thing I wait for confirmation. So where's my demand zone? Inside the Asian range. Demand zone is here. Inside the Asian range. And demand zone is also below Asian range here. Okay, so I think we're going to wrap up now. In the next 2 minutes, I'll be out of here. In the next 2 minutes, we're out of here. So that's what I'm waiting. I'm waiting for price to come into my demand zones and give me a confirmation to buy, right? And give me and my TP is going to be at the equilibrium, except the markets, like yesterday, except the market breaks out of this guy, I will now change my bias to sell. But until the market breaks out of this structure, until it breaks out of this structure, I'm expecting to see what a reversal to the upside. Okay, do you understand now? Is it clear? I can only sell when the price gets to my equilibrium or my what? My origin of brick of structure, origin. But aside from that, everything inside there is going to be what? A buy. So I have gotten my low, my high, higher low. I'm expecting what? Higher high, higher low, higher high. Do you understand now? So that's it. Then also there's a principle of mid-week reversal. My old students know about this. Mid where we have Monday sell, Tuesday sell. There's a high chance that Wednesday and Thursday will be bye bye. Right? If Monday has been selling, Tuesday too, we had a sell. So there's a midweek reversal concept in market that states that at the mid of the week, there is most likely a reversal. So if Monday is a sell and Tuesday is a sell, Wednesday promises to be a buy. But we have to wait for confirmation on Wednesday, Thursday, and Friday. Yeah, good. So this is it. Monday into Tuesday, we had a break of structure, right? Zero, one, two, three. Wednesday, we might see a what retracement, right? Then maybe Thursday and Friday, we now go back to what the demand zone. Is this clear? Monday to Friday, these are our price action. Very clear. Okay, thank you. Yeah, don't be trapped on the lower time frame. Yes. So once again, today is day two of 100 days. I'm really enjoying these 100 days. Like the past 2 days has been very, very eye opening for me. So I want you to take this 100 days very seriously. It's going to help you every single day. Ensure you are doing something to improve on what you already know. Study every single day. All right. Second announcement is that we are going to be having our online bootcamp next week. Online bootcamp next week. Let me see if I can send. I'll send the announcement to the flash to the group again. So first announcement is today is day two of the 100 days. Second announcement is our online bootcamp starts next week, Monday, Tuesday, Wednesday, online, 8 to 9. Invite your friends, send the link. Let's fill the room. Then from next week, every Wednesday on the island at the office, we have a physical class every Wednesday for the next 3 to 6 months. I've booked the month for you guys. So like I say I'm not joking. I wish to even I don't the money is not the issue. But why I charge for mentorship because I want to appreciate the value. I can teach for free. I don't need to collect money from you. I make money from trading, right? Even when I even teach safe, it makes me miss opportunity on my trades. So if I will have made like maybe $100, for example, one hour, right? So but that 1 hour now, I used to teach and miss opportunities. So the money for mentorship is nothing. It's just a commitment fee. All right. So free class every Wednesday at the office on the island. I'll send the address to. You know the address now. You know the address. The next announcement is. I think that's all. The mentorship. Yeah. So let me see who is interested. If you're not in my mentorship, let me see. Let me see you signify. I want to know those are going to take. If you have already paid for the mentorship, okay, Mr. Abed has paid. I have two persons that has already paid for the mentorship. If you are yet if you are interested in the mentorship, right? Like don't let the money should not scare you. You can pay instrumentally, right? You can pay instrumentally. So I'm gonna say if you are on the group, I want to believe we are all on the group. If you are not on the group, on the two groups, yeah, are we all on the group? Are we all on the group for the free group and the 100 days bootcamp, 100 days productivity? I just need 10 to 20 persons for mentorship. I don't take more than 10 to 20 persons for every month. Okay, I want to confirm that everybody is on the group. If you're not on the group, okay, I'm both. Yeah, yeah, both on the group. Yeah, so pretty much everyone's on the group, right? So if you're not on the group, find a way to reach out to me, and I'll add you to the group. Right? You can just send me a private message. Right? Reach out to me. I'll add you to the group. I don't want you guys to miss this batch, October batch. I'll be sharing so many things with us. By the end of 3 months or 6 months, you are now trading yourself. Okay, you're now trading yourself. You can even start managing funds. So let's not waste much of our time. Let me get back to business. I have a lot to do today. Okay, I have a lot to do today. Importantly, let's check the news before we go. I love trading the news. Like I love trading the news. So 1:15 this afternoon. Okay, we have ADP non-farm payroll. NFP on Friday. We'll be live together by 1 o'clock. I will do a meeting. Right, we'll be live to trade NFP together on Friday. Okay, so yeah. Any more questions? Any more questions? Any question? Any question? 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 Um, can I end the stream now? Let me get a 3 years to end the stream. A 3 years. Can I end the stream now? Yes, 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 yes. Yes, 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 yes. Hmm. I want to believe we have all subscribed to this YouTube channel. We are building a community. We are getting started. So we are building from scratch. Right. So let's make this work. By this time next year, I will have done um 10,000 community. With the way we are going, I'm very sure by this time next year. The goal is 10,000. 10,000 by this end, say by the end of this year, the goal is 1,000 community. So I also need your contribution. Like spread the news. If you know that what you are getting is valuable and is impactful, tell somebody to come and learn. If they can't afford the mentorship, just come for the free class. Every morning I teach in the analysis. So even if you're not in the mentorship, you still have an understanding of what we do. Asian range and daily close. I don't understand. No problem. You are in the class now. We will treat it in the mentorship class. Don't worry. Like I said, what we do every morning is not to fully break down the concept. It's just to analyze the market. So if you don't understand, we teach that in the mentorship. So maybe tomorrow, live market, I will break down in 5 minutes Asian range. So I said I was going to send Asian range video to us. Yes, so let me do that right now. Okay. There's a video to make you understand Asian range. I'll send it now to the group. I thought I sent it yesterday. Um or did I not send it? I think I sent it to the group. Yeah, I sent it to the group. Yes, I sent it to the group. Let me send it again. Let me send it again. So once you watch that video, yes, let's go. Yes. So I've sent it again to the group. Once you watch that video, you understand the concept and basis of it. That was the video I personally watched to understand Asian Ridge. The first video I watched. So I can bet you that that video will change, it will improve your strategy. When I explain to you, game over. So please watch that video, take notes. Then when I explain it to you, you will now understand better. So if you have not watched it, you still be confused. If you have not watched it. So take your time to watch it. When you have watched it, then when I talk, it makes sense. Yeah, so any more question, guys? Let's call it a wrap. Please invite friends that you know that are serious to learn. I don't want those that want quick money. If you want to make money, do copy trading and do partnership. You want to make money in forex fast. But if you want to be a trader, take your time and learn. Take your time and learn. You will get it. I can assure you. All right. So let me get a 3 years to end the stream. 3 years to end the stream. We are already 1 hour 13 minutes. We have spent a lot of time already. No more questions. I want to end the stream now. I want to encourage us to watch the stream over and over again at your free time. Okay, don't just watch it again and again and again so it will stick. Okay, I'll send the replay to the group. So right, so that's it there.